Hello everybody, it's July 5th. It's the weekly review. Hope you had a good 4th of July. Markets certainly didn't have a good week. They ended up noticeably lower, ending out the month about 2% lower on the S&P, barely positive now, negative on the Dow, and now you're down to about 6 and about 3.5 on the Russell. So definitely coming back in. A lot of that, of course, was on Monday's fall as a result of what happened in Greece, the surprise snap elections that were called on Friday night, um, and the fallout that came from that with the default and so forth. So now you have elections again today that are taking place. I don't think they're going to ripple through these markets in any positive way immediately, and I'll talk about that as we get going here. So, what do we have? Technically and fundamentally, there's really no more room left on the downside here. So that's the first thing to note. If we pull up the S&P 500 here, and I've got it on the daily, we'll start with that, and then we'll switch over to the weekly. We've got a retest regen zone here. It's into it. It tested right to the top of it on Thursday. 3 bars back up. That's typically where you see a failure. Now the retest regen over here is higher, right? So we could actually get back to the top of the breakdown bar. So if we do rise farther, I think this is going to be the key area. If we fell here, it's an even more negative situation, because the ABCD structure that it would create would be fairly steep, and that would take us quite a ways down. And we'll look at that here as we go to the weekly. Where could it take us? Well, it could easily break these swing point lows and project us back towards these lower lows on the weekly. So now the positive that happened last week is that this low actually held, right? You went into it, you couldn't break it. If I get the right bar here, you went into it, you couldn't break it down, and that was this bar. And so we go into it underneath it, right, close back over it. If you look at the volumes associated with it and you look at the volumes of what was attacking it, it wasn't as much. Now we do have a 4-day week, so this volume was actually a little bit higher if you average it in. But the point is that they weren't able to break it down. If you're not able to break it down, that says, okay, sellers are unwilling to sell at lower prices. That's on the weekly. That's the positive if we have a positive, right? And we actually have positives over on the NASDAQ and the Russell. On the negative side, though, there's really no more room to fall. In other words, if you start breaking here, you have a pretty good chance of breaking there, right, on this swing point low. And what does that do? That drops you all the way back into the 1970 to about 1980 area. That's a long way down. I mean, we're trading right now at 2076, so we're talking about another 100 points, another 5% drop if we get back to these levels. So, this is kind of a key area. This support zone that you see on the weekly is critical. If you don't hold this 2045 number, which is this swing point low, you're going to break 2 swing point lows on the intermediate term time frame, and you're going to break swing point lows that exist on the daily time frame that have moved off to the left side of the chart already. And so that becomes a fairly critical area as we come back down. So that to me is a key point, and that's a key point that we should recognize. Positive in that they held, negative in that there is no more room on the downside. Of course, we can't really skip Europe because everything seems to be happening in Europe. And I did point out earlier this week in one of the talks that I gave, that you kind of have these gaps that are taking place off the news flow. So you go down, you stay down. You go up, you stay up. You come back down, you stay down. Right? News flow keeps flowing back and forth. Here was the hope. Here was the fear, the dejection. What's it going to be this week? Are we going to get hope again off of an election vote? Or are we going to get more fear and we go down and try to break these lows out? So at this particular point, Europe is really beholden to what's happening with respect to Greece and the news flow off of it. For good or for bad, that's the way it's set up. The other thing that's really happening that's starting to become big news is Shanghai. Shanghai really should have held on Friday, while we were closed. This was an under over on this bar, right? You got up underneath it, you got back over it, right? That should have held. This bar should have held. And instead, it traded higher, almost got back into the swing point low, but traded higher and then broke down again. Now, the ABCD structure on this is already done. In other words, if we go back to here and do an ABCD structure on the way down, it was basically done right there. Now we push underneath it, so we're stretching way beyond what is typical. And of course, this has been a huge bull market. If you pull this back and look at it on a weekly, you can see it. So that stretch, even though it's beyond where it should go, it's not unprecedented that if you have this kind of a move up that you can get a very dynamic, fast, hard move to the downside. The problem is now that it's done this thing could just continue on right to the swing point high. Now it's not that much farther when you're talking about where it is on the weekly. You got a 34.06, you traded as low as 36.33, so another 200 points down would actually get you into that. And as you know, anytime you get more than 6 bars, right, the probabilities when you come back in for the first retest regen are pretty high that it's going to trade somewhere near the high of that and bounce. And probabilities greatly favor that taking place. So if this does plunge straight on down into this area, it probably is still going to be a buy, and I think it's going to be very hard to buy it. But that is probably a setup. Now the other thing that's happening with all this is China is pulling out all stops to try to get this thing to quit going down. They changed the margin rules. They did the rate cuts last week. They're making it so that you can pledge your personal property. They're telling the brokers not to call margin. On and on and on. They got these sovereign funds that are supposed to come in, some pension funds that are supposed to buy. They got the brokers coming together saying, it's just a huge plethora of news, almost like desperation, which may be fanning the fuels here actually. But I suspect you're going to see a bounce here at some point. Where can it bounce to? That would be the next question. And on the weekly, right, it's back into the retest regen zone. And I suspect the first bounce is only going to be a bounce, and some sort of a larger range is going to set up off of that. So assuming it's that far up, that far down, and comes back into that, if we take, let's just assume it comes in and does the retest regen. Let me just clean this up and do it. So assume it comes all the way into here and does the retest regen. Well, a bounce, half of that would actually do what? It would take you into that low. That would be just about halfway up. That low is right there, right? So that would take you right back to that retest regen. So trade to here potentially, bounce all the way back up to there, and then try to set up the ABCD structure to the downside. That's the setup. I don't know that they're going to make an ABCD to the downside. I don't even know that they're going to make it down to here, but right now, very negative vibes coming out of there, and you have to recognize, when you look at China and you look at what it did here, this should have bounced, it didn't. That tells you it's more negative than you think, and therefore you've got to respect it. So that's kind of Shanghai. So you got problems in Asia, and of course that's bleeding over to other markets like Hong Kong, Japan, and so forth. You got problems in Europe off of Greece. You got the U.S. spilling lower off of Greece, but you've also got the U.S. starting to show some mixed economic numbers, and you've got earnings coming up. So, I'll talk about this in a bit, but if we were to get a continued sell-off this week, coming into earnings next week, it actually might set up a pretty good buy situation. Let's go back to the data here. So the indexes we talked about hold. You got the Asian pressure. You got the earnings that are going to start. On the positive side, the fact that these held on the NASDAQ and the NDX is a very big positive. and one of the few positives we actually had last week. So if I break it to the weekly here, this is the NASDAQ. You can see this bullish retest regen, right? It comes back. Well, actually, I misspoke. The weekly on this did not break down. It was on the, let me see, I think it was on the NDX. And let's go to the weekly here. Yeah, it was on, yeah, there it is. I was trying to find it, I'm sorry. Here it is here. This was the weekly I was thinking about. So it comes down, test into it, right, holds. This was the breakover, right? You trade up in there the whole time. You come back down, you trade again. You got low volume, you're holding. That's a weekly retest regen that's still holding. And so, you know, you didn't have a lot of positives last week, but that was one. And the other one was on the Russell, not the NASDAQ, and that was this one, right? You came back into here and you barely, just barely held. So now, you know, these are the only positives out there in terms of a negative week that really stood out. And so those to me would be the things that you want to see continue to be positive this week if this market's going to try to actually turn and bounce. The other positive, I guess, is the fact that Europe did not break to lower lows, but again, that vote today, you know, whatever happens off of that is going to be a big part of what happens next. On the negative side, you got the bearish retest regenerates playing out. So if we go back and look at the S&P 500, right, you come back up into this, and these are going to try to regen lower now. And so, you know, so far they've been unable to break over the swing point lows on any of them that broke down. The other part of this is typically a 2 to 3 day bounce after a big push like this down is, you know, in a classic sense, that's about all you usually get. Now, the last 3-4 years has been different. I don't know how many of these I've seen that just keep going. I mean, you know how we used to talk about, you know, V-shaped reversals no matter what. And even though we've had, let me do it a different way, even though we've had these V-shaped reversals, you know, we haven't been talking about them like we did for so long, right? Come down, you straight back up. You come down, you're straight back up, right? Well, typically what happens is you come up partially and then you just head back down. What we've seen over the last 3 years is this, just straight back the other way. We'll see which one it is pretty soon, and which one it is going to be a big deal, especially if it generates back to the downside, because we have not seen that. I can count them on less than one hand. In other words, they haven't happened. And so to see the break that actually regens lower, does an ABCD structure lower that's significant, would be a big difference in this market, and would likely say, hey, you know, the character of this market, the tone of this market is a lot worse than we think it is near term. NASDAQ, Russell, they reeled back in, right? We just looked at those. They were doing the retest regens on the Russell and on the NDX, and the NASDAQ came back. Even though it's in the higher area, they both got pulled back in after the breakouts. So if we look at the Russell one more time, for example, here was the breakout, right? And it gets sucked right back in. And that has happened all year. 4 months ago, we talked about it being range trades. It's still range trades. It really hasn't changed. The only question now is, will we change the range on the downside, and will we actually get a push to the downside that sticks? China, I talked about earnings. You know, I want to talk a little bit here about earnings because, you know, earnings are going to be out. I have seen fewer warnings, and there's more positive comments recently. In other words, what earnings have come out, you know, preliminary earnings that have come out, you know, companies releasing data about them to help the analysts guide their numbers, they've been more positive than negative, and there's been fewer negative surprises than in the past. So it looks to me like that dollar effect, the negative dollar effect, isn't going to be a big factor this quarter, and I suspect we're going to see earnings better than is expected. Not just where they get guided, but actually really better than what we probably expected despite the guidance. And so my guess is that if we do trade lower, and I want to go back to the S&P and I want to pull it back here, Let's say that we trade even into this low over the next week, but more likely into one of these if we really fall. If it came down that deep, and it does it over the next 7, 8 trading days, that would bring you right into the banks, which probably are going to be some of the better earnings, setting up a buy the news type trade on earnings. And so if we do get a steep fall, that area is probably going to be a great area to try to buy, assuming it comes back to here and it just comes straight on down. So that's something that we have to keep in mind and be prepared if we see it back into this area and it's a straightaway move. Be prepared for some sort of a good earnings bounce potentially. Negatives is really still what we've talked about with Greece and Europe. I don't see good coming out of this. No way. Whether it's yes or no. Yes, we'll probably get a bounce, but they'll probably sell it because it's going to take another couple of weeks to figure out something. No, probably going to get more selling. And so, I can't see a positive situation near term as a result of whatever this vote ends up being. What I want to watch for, mostly last week we saw what we expected. This week's much harder because we already had a decent sized correction. And those employment numbers that we saw Friday really weren't that great. So in other words, not much pressure on the Fed to raise rates. And so that's kind of a slight positive. The question I have is, are we going to see these breakdowns on intermediate term time frames? If these start to break and we start seeing breaks on the NASDAQ, on the short term time frame, if we see them on the weeklies, on the NDX, on the Dow, I haven't looked at the Dow in a while, but if we see it here on the Dow on the weekly, right, those are going to be the things to see. If we start seeing that, especially on Monday, right, the whole week's probably going to be negative. And so, if we see that kind of negativity, then we just got to back off, keep playing the short side of the tape a little bit, and wait. Wait for it to oversell itself, and then we can buy into it. The other big piece is going to be whatever Shanghai. I mean, Shanghai has dropped 30% now. I mean, it doesn't seem like it, but it's 30% already off the highs. That's not an insignificant number. I mean, it's a fairly significant number, and it's done it in roughly in 3 weeks, 14 trading days. And so if we pull this back, 14 trading days from there to there, it's 30%. That's a huge number. Now, at this point, if we go back to the weekly, at this point, if you take the close on December, which is here, we were at about 3,200. We're already back to 3,684. And if it trades into the swing point high, we could actually get back to even on the year after a 35% move to the top side, 35-40%. So about 35. If we come back in there, what a huge turn. But as I said earlier, I do expect you're going to see a bounce somewhere in some sort of range trade try to set up. The real question will be, how does it behave on the bounce and then the sell-off? So far, and going back to the daily so you can see it more clearly, so far we haven't seen a huge escalation in volume. Now you can read that as good or bad, and it depends on your point of view. A lot of times, it's negative. It's a negative view when you see no escalation. You actually want to see them just blow out all the stops. Well, it's just a slow bleed instead, and that can bleed for a long time. On the reverse side, the fact that I don't see more and more sellers willing to sell at the lows also suggests to me in the neoclassical view, and I was giving you the classical view a while ago, in the neoclassical view, I actually view it the other way, and that is that, yeah, if we get a capitulation, that's fine, and then an undercut of that and a move up is great. But when you get a capitulation like you did here, right, and you leave volume at the lows, it's an invitation to come back and test it. When it did, it should bounce. It didn't. That puts more pressure on it. I suspect that pressure is going to play itself out. The fact that it's already finished up an ABCD structure says that we may get a turn fairly soon, but right now there's nothing here to tell us that. And so for me, this is going to be one of the keys this week is, does this really start spilling over in a big way to the rest of Asia? So that's what I'd be watching this week. Earnings wise, they really don't have much, a few, but the real earnings come out next week. You get the Fed minutes on Wednesday. That's going to be the FOMC meeting minutes. That's going to be probably the larger thing. And you got Fed speakers this week, a couple of them early, and then Yellen on Friday. If we go to the bottom line, Greece to me has been the story. Probably going to continue to be a story for another week or two at least. It caused ripples last week as a result of what happened, right? And what I mean by that is that snap election, the unexpected election being held. The default that followed as a result of, not a deal being worked out. If those ripples get bigger, in other words, we get a no vote tomorrow, right? You can get another push down. Now, I do think at some point even that will play itself out, but the ECB is going to have to step up and stem the tide if you get that kind of fallout, because ECB has to protect the euro and has to come in and keep rates low in those countries that have problems, and they actually have the ability to do that now with the structures they have put in place, and I expect that's what they'll do. So whatever sell-off comes, I suspect it will be contained, and probably contained in fairly short order. And if you go back and look at, I'll just pull up the DAX for example, the lows that this thing's going to try to come into are these two bars that we've talked about before. That's not all that much lower if they go there. And so again, if this does trade lower, I suspect it's not going to be a huge sell-off, but instead another leak lower, and then you find buyers. And if we put that ABC structure in, you can see how it comes into that area. So I'm not too worried about Greece in terms of a big sell-off. Yeah, we could get more bleed lower depending on what happens in the Greek situation. The high runner case this week, in my opinion, is that you're going to see the intermediate term time frames break. I think that's probably the risk on situation. That was what I talked about earlier on the S&P 500. And so if I were trying to ask myself, what is the most likely scenario, I think that is, and if I pull that weekly chart over, I think a break of this area and at least a trade back into here, maybe under back over, or worst case, a spill all the way down to here over the next 10 days. I think that's probably a worst case, and I think the high runner case is this swing point low breaks this week. And the reason I say that is I don't see any news flow that's going to be positive. No matter what Greece does, you may get some positive out of China, but it will just be quote-unquote a dead cat bounce is what everybody will think. You got no news here other than FOMC meeting notes. I don't think they're going to be positive. And you got Yellen speaking on Friday, which is probably too late to do anything for the week. So I can't see a scenario here that makes me that positive. I think this is the higher runner case. Okay, switching quickly to the portfolio, I'm not going to go over any of these positions other than to look at Asher. And I've already talked about the SSEC, which is the Chinese stock market, Shanghai. And what I would note here is that this is coming back into this area. If we look at Asher, it's going to be the same sort of test back into that area on this one. If we pull it over, it's back into the same sort of an area. That's going to be a buy as it comes back into that area. And I wouldn't be trading off of this so much as the SSEC, right, the Shanghai index. And so as you come back into here, that's the place I'd be looking, because this is just, a derivative off of that, and that's where I would be trying to trade this on the long side. I took a position on Thursday thinking that we were going to get that turn. We didn't get the turn, and so now we're in a position where, okay, we're going to have to flip into whatever we get. And then what I'm talking about, if I come back over here, is whatever trade we just made, we're going to have to flip that trade back into a bounce. And the reason for that is it just told us on Friday that it's weaker than we think. And so if I'm told that it's weaker than I think, and I bought some not thinking that, then I need to flip that stuff out, right, on any kind of a push back up into these areas so that I can think about buying something lower if in fact it trades lower, which it's trying to tell me it wants to. And so I want to bounce to sell into, right, so that I can buy lower if in fact it does that. If it just trades sideways, or maybe the bounce even trades higher and then comes back, it's all right. You can buy it back wherever you sold it. When the market doesn't do what you want, you have to, whether it, I'm not talking about the whole general market, but whatever your trade is, if you put it on thinking one thing and it does something else, then you need to change the way you're looking at it. And that's the main thing I wanted to point out here with Asher. The rest of these, Germany's still waiting. SBUX we want to buy. NPX we want to buy lower. EUO, nothing to do there but wait. EWH is captive to what's happening in China. Same thing with Japan. Apple really weak coming into earnings, which is surprising. Usually they do us, they usually trade higher into earnings than sell off. So this remains a bit of a mystery. PANW we almost sold, but just missed our trade, our price. Now we need to watch it. AMGN I bought too early. Mistake on my part. That is the wrap. And on the weekly here, I'm going to have a busy week this week, so I will be available, but not nearly as much as I typically am. I will still do what I typically do in the mornings. The TNT room, I will probably be in and out as time permits. And that's it. I will talk to you as the week gets going. If there's anything I can do to help you, let me know. Otherwise, have a great week, and I'll talk to you soon.